Welcome. This is Dave Zegel with CWOs for Hire, a fee-only financial planning firm focused on helping small business owners. Today, we are looking at saving on self-employment taxes by choosing to be taxed as an S-corporation. If you are operating as a sole proprietor, or perhaps even in a partnership, then you may be sending more money to our federal government than necessary. We'll look at a side-by-side example of a sole proprietor versus an S-corporation, so you can see at a high level the benefits of the S-corporation structure. First, a few details. When you set up an S-corporation, you'll have to pay yourself a salary by determining reasonable compensation and send quarterly tax payments to the government. More on this important topic a little later. You'll also have to file a separate tax return for the S-corporation itself, and then the K-1 form for the S-corporation gets entered onto your personal tax return. So I always get this question after explaining those details. Why in the world should I set up something where I'm going to have to file an extra tax return, start paying myself through payroll, submit taxes quarterly, and do all the work to determine what a reasonable compensation is? The example below will show you exactly why it's worth it. Let's start with the sole proprietor. For simple math, we'll assume that you make $100,000 after you pay all the business expenses. Now, when you work in a corporate job, you pay 7.65% in taxes for Social Security and Medicare, and your company matches that amount for a total of 15.3% of your salary going to the government. When you're self-employed, you get the privilege of paying all 15.3% of your income to the government for Social Security and Medicare taxes. You heard me right. If you make $100,000, as in this example, then you are paying $15,300 to the government for Social Security and Medicare. If you don't believe me, you can go look at line 57 of your tax return and you'll see that tax. If your business is making money as a sole proprietor and you don't see that amount on that line, something might be wrong. Let's look at what happens when you elect to be taxed as an S-corporation. Here's the trick. Big corporations pay Social Security and Medicare taxes on every dollar they make? Of course not. They pay those taxes on the payroll to their employees. So why shouldn't you do the same? For this example, let's assume the S-corporation makes the same $100,000 a year. But now we determine that a reasonable salary is $60,000. Now, look at what happened. You pay $9,180 of self-employment taxes on your payroll, and the remaining $40,000 is not subject to those self-employment taxes. The end result is an annual savings of $6,120 in this example. Well worth the trouble of some additional administrative items. I'll make one big caveat with all this. Please don't try this at home. What do I mean? Make sure you get the help of a CPA that knows what they're doing in this area, especially when determining what your reasonable compensation is. It requires proper research and documentation. The last thing you want is an IRS audit where they determine your salary is way too low and now you owe additional taxes, penalties, and interest. Electing to be taxed as an S-corporation can yield big annual tax savings if done properly. If you have any questions or would like our help, please call us at 314-649-PLAN. That's 314-649-7526. This is Dave Zegel with CWOs for Hire. Thank you for watching.